Hi, welcome to the Market Alert for Thursday, June the 16th. And as you will have already seen, that the Fed has actually raised rates by 0.75. A lot of headlines this morning, so I'm going to whiz through the stocks and bonds and bullion rally after Powell's perjury-prone presser. What they're talking about here is his press conference. He's perjured himself because it's a pack of lies. There is no sign of a broader slowdown in the economy that I can see. Yeah, that's about right, isn't it, with all of these? There's the main headline from Sky, the highest rise in nearly 30 years. And here Fed hikes 75 basis points, but Powell does not out-hawk expectations. So that means there's more rate rises coming. US stocks gained after the Fed delivered 75 basis points. Yeah, last night, I don't know about today, although Powell doesn't expect a 75 basis point move to be the norm. Next month, bank, which first correctly called 75 basis points hike, now sees 50 basis points in July due to economic slowdown. I thought Powell just said there wasn't going to be any slowdown. Doesn't see no sign of a broader slowdown yet. The banks do. Fed hikes rates the most in 28 years. It's 30 years actually. Signals Volcker era is back. Well, not quite. But as it says here, what comes after the Fed? Time to look beyond 75 basis points. Well, slowing economy, recession, etc. Here's the graph from Forex Factory, and here you can see that rise to 175, which is there, and it's only a 0.75 rise to get back to the highs that we saw back in June of 2019 before they started to reduce rates there. Also yesterday, if I can find it, it's here. ECB yesterday, let me just drag this down so you can see it. ECB to hold emergency meeting to address market sell-off. This was interesting. I sat around waiting for them to say they were going to actually do something about it and raise rates, and they did sweet nothing, I'll put it politely. Which you'd expect, particularly from this criminal here, Lagarde. So, gold-silver ratio, good day yesterday for silver. I don't think it will be today, but you can see there the ratio dropping. Silver held really well yesterday, but like I say, don't hold your breath. I think we're going to get a straight reversal today. Let's move on, have a look at the stock markets. We'll start off with the Dow. And this is the daily chart. You can see yesterday the market up strongly there. It doesn't give a real picture of what happened yesterday. We'll have a look in the 30-minute chart at the actual ranges. It's not picking it up there. But you can see the market quite stable yesterday, an increase in volume, but overnight the market now already starting to turn over and move to the downside. In the 30-minute chart, well, here's all the action. You can see it. The market did obviously not a lot beforehand, although I say that this is the Dow we're talking about. So let me just have a look at the kickoff to just before the news. We had a 305-point range, and then once the market heard the news, we had an 840 swing in the market from this low to this high. Massive, absolutely massive. But you can see what's happening now. The reality is kicking in. We had the more or less, I wouldn't call it a PPT-led rally. It was just a dead cat bounce, and then the market started to sell off, and now we're below the DP already. So watch the low on this. We could see an acceleration. 75 basic points is going to really impact the US markets, well, the economy, not the market. And no doubt the banks will want QE to keep them afloat. So they'll tank the markets to get what we just saw with the ECB, to get them to try and respond and do something as they did in 2008. So in the German DAX, you can see a similar picture. Yesterday we got a bit of demand there for the DAX as it moved higher. And that's despite the fact that they had the emergency meeting in Europe as well. But again, overnight, we're already back below the 5-bar moving average there. And if we have a look at the 30-minute, you'll see the same pattern as the Dow. Also, not a bad range considering it's an overnight market for the DAX when these are actually released. 220 point range from the low to the finish of the Dow for last night. But you can see it was making its way up during the day. This is when they released the emergency meeting, and then the market just continued to the upside on all sorts of positive BS. In the 5-minute chart, here's that emergency meeting. If you wondered why the market just fell out of bed at that point, that was the reason. Again, you can see them buy the market back immediately in the following bar and then bring it back 100 points. Pure and blatant manipulation. Another one when they made the announcement. This was the announcement they were going to have the meeting. This was after the meeting when they said they were going to do sweet nothing. Unbelievable, isn't it? So then the market traded sideways. You'd have to trade what you see. It's oversold. We've got a crossover, we've got divergence, we see the volume coming in, and then off we go for another 100 points. And then, of course, in the evening, we get the Fed announcements. The market trades sideways for about 30 minutes, 35 minutes. 7:30, Powell makes his statement. A press conference, not so much statement. Again, we were oversold and the volume kicking in. And then we see the market moving to the upside before it sells off before the close there of the US market, that is. And then overnight, you can see that we're slowly making our way down to the DP. If we go back to the 30-minute chart, like I say, watch the low, because this low is in the daily chart. It's not this one. It's going to be this one, which is here. That's the big low. But you've also got, let me just drag that over, let's just get rid of this one here. You've also got this one, this yesterday's low is what I'm talking about, so 13,300. Watch this level just in case this continues to move lower. It may be some initial weakness here, and they'll try and move the market to the upside. But I very much doubt it, because the reality is now that they've raised rates by 75 basis points, and this was just hot air to suck people in last night. And like I say, if the banks want any more money from the Fed, they're going to have to tank the market and, see pension funds lose money, etc., in order to achieve that aim. And in the S&P, similar to the Dow, you've got the markets up yesterday, but down on the overnight, as you can already see there, starting to move south. Also through the DP there's the reaction to the market. We were overbought in early hours, and the market's been moving down since. Again, it's the low of yesterday that's going to be really important. The low in the S&P was made during the Fed announcement, so even more important for this market. Also watch the fib retracements as well as the market makes its way down, particularly these three here, just to see if there's any sort of support. We're just through 50 there at this time. The FTSE also yesterday up, demand, and the demand really was just an absorption of the selling that was coming in. And you can see now there's a change of opinion there as the market again is showing the same as all of the other markets and starting to move lower. You can see that in the 30-minute chart there, through the 38, through the 50, and again 62 is also taken out at the moment. This is the ECB BS yesterday, and you can see and that the other one I think would be there. This is 30-minute chart, isn't it? Yep. So the other one is here, lunchtime when they made the announcement, down for 30 minutes, and then the resumption up to here till it overbought, and then moved lower, waiting for the Fed announcement, and then it was up and down all over the place as the market tried to find direction, which we saw moving to the upside. But now the reality, as I said before, is kicking in and moving to the downside. You will get a bounce. You always get a bounce, but at the moment it's not looking good on the overnight at this time, unless it's been engineered to get people to go short, and then they're just going to continue the move to the upside. But we'll be able to take a view on that by using the strategy that is being covered in the course. In order to do so, we just trade what we see. I'm just giving a broad perspective here of what could and is likely to happen over the last, from patterns that have occurred over the last 30 years. And in the currencies yesterday, huge volume for the JPY, but again, the market failing to hold on the overnight. A very narrow range yesterday. As I said before, it's all about the US dollar on Fed days, but managing to move higher there because the dollar moved low, which we'll come back to shortly. So also this making its way back. Watch the DP for support and the 50 EMA in the yen. Let's have a look at the pound. Again, same thing here, coming back because the dollar, despite the fact that the rates were raised by 0.75, actually dropped. In fact, let's have a look at that now while we're dealing with currencies. Let's just see if I can find the chart. So there you go. You can see the market rallied up and then it was sold into, but overnight it's got a bit of support there back at the 105 area at the moment. Look for a sort of an 89% retracement and then a reversal. And remember, yesterday we looked at this area here on the 4th of May. They raised rates. I'm just looking for it. So again, you see on the 4th when they last raised rates, the dollar was down, and then they moved it up for the next 5 or 6 days, and then it tanked, and then they brought it back with the prospect of 75 basis points, and there we go. We were the same as that there, and now we're starting to move back to the upside. So expect this high to be taken out. Again, this is going to put downside pressure on the metals, which we'll get to in just a moment. But in the pound, of course, you can see that yesterday as the dollar went down, the pound went up. There was demand there, but now again we're seeing the same thing we're seeing in the stock markets at the moment, all heading to the DP levels of all these respective markets. And finally, let's have a look at the metals. Starting off with silver, as I said in the intro, had a good day yesterday. The market up, a lot of volume there as well. Could be taking out the shorts. I expect a straight reversal off this today, back down to the 78% retracement because of the US dollar moving up for the next few days. Nothing we can do about that. That's the way it is. You can see the market's reaction there, moving up nicely. But overnight already, again, same as every other market that we've looked at, heading back to that DP, but stronger than the rest at the moment as well. Nice move up yesterday morning, continued, started to drop off a bit as we got into the evening, anticipating the Fed announcement, the market trading down to the high, the 200 MA as well. And then we see the buying coming into the market and the market moving higher thereafter. But like I say, expect a straight reversal off this market and for gold today. It's not ready to move up yet. They need to see more selling in the stock market to move out of that and into the metals to start driving them. And also the 75 basis point not to have any impact on the rate of inflation as well in slowing the economy. So there you go. Gold also moving higher yesterday as well in the daily chart, coming off that 78% retracement, and in the 30-minute you can see the reaction there as well. A bit stronger than silver because it's not heading down at the moment. It's stuck in a sideways range at the moment, unlike silver, which is heading for the DP level. So there we go. There's a quick roundup of everything that happened last night, the market's reaction, and where it's currently trading in respect of that rise of 75 basis points as well. So like I say, for me, the weakness should resume because the banks, they did this before back in 2019. They tanked the markets. The Fed comes in. You saw it with the ECB yesterday. They don't like the stock market falling out of bed. Doesn't help their own individual portfolios, does it? Let's face it. So they'll do anything they can to actually bring calm to the markets, etc. Whether it's more further QE, which I think we'll see going into the autumn personally. Okay, that's it for this one. As ever, thanks for watching. See you in the next.